Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we'll be discussing regarding Nifty, Bank Nifty, the key levels to watch out for, as well as the key sectors in focus for today's trading session and the next few trading days. First up, coming to the update in the global markets in trade yesterday. In yesterday's trading session, all the three US indices ended on a positive note. We have the tech-heavy Nasdaq, which has outperformed for the second consecutive trading day as it has surged by 0.84%. The Dow has ended higher with a gain of 0.41%, while the S&P 500 has settled above 5,500 mark with a gain of 0.62%. The Nasdaq and the S&P 500 marked a fresh all-time high on a closing basis yesterday. If we see, the S&P 500 is likely to continue its positive momentum and test the levels of 5,580 followed by 5,650 levels in the short term. While on the downside, if we see, the support has shifted towards the levels of 5,480, 5,460 levels. Coming to the update regarding Brent crude, so Brent crude is likely to test the levels of $88 a barrel followed by $92 in the short term. While on the downside, if we see, the support has shifted higher in the zone of 85.80, 85.5 levels. Coming to the update regarding the US dollar index, so DXY, the zone of 105.50, 105.4 will now act as the immediate support, while on the upside, any sustainable move above the levels of 106 will lead to a sharp upside rally up to the mark of 106.50 in the short term. Coming to the update regarding Nifty, so in trade yesterday, the benchmark index marked a high of 24,236 and thereafter witnessed minor profit booking. However, it has ended the session on a flat note at 24,124 level on the daily scale. If we see, it has formed a small body bearish candle. However, the major trend of the index is still bullish as it is trading above its short-term and long-term moving averages. These averages, if you see, are in a rising trajectory and they are in the desired sequence, which suggests the trend is strong. Going ahead, considering the gap up opening, the zone of 24,120, 24,100 will act as a strong support for the index. As long as the index is trading above 24,100, it is likely to test the levels of 24,260 followed by 24,350 in the short term. While on the downside, if we see, the index has slipped below the levels of, if it slips below the levels of 24,100, the next support is placed at 24,020 levels. On the derivative front, if we see, the July futures has ended on a flat note and the cumulative open interest of the current, next and far series has surged by 0.35%. Among the constituents of the Nifty index, 9 stocks have witnessed long built up, 12 stocks have witnessed short covering rally, 20 stocks have witnessed short built up and 10 stocks have witnessed long unwinding. If we come to the option chain, 24,200 strike has significant call open interest followed by 24,300, and on the put side we have 24,100 which has significant open interest followed by 24,000 strike. For the weekly expiry, if we see, the put call ratio is at 0.99 and the max pain is at 24,100 strike. While for the monthly expiry, if we see, the PCR currently is at 1.44. Coming to the update regarding Bank Nifty, so the benchmark index Bank Nifty has outperformed the frontline indices as it has ended lower by, if you see, underperformed as it ended lower by 0.77%. On the daily scale, it has formed a bearish candle. Among the constituents of Bank Nifty, barring HDFC Bank, all the other stocks have ended on a negative note in Tuesday's trading session. So going ahead, the zone of 52,150, 52,100 will act as the immediate support for the index. As long as the index is trading above 52,100, it is likely to test 52,700 followed by 53,100. While on the downside, if we see, if the index slips below the levels of 52,100, the next support is placed in the zone of 51,750 followed by 51,700. So that's the zone 51,700, which is the next support on the downside for Bank Nifty. On the derivative front, if we see, the July futures for Bank Nifty has dipped by about 0.64 and the cumulative open interest has dipped by 2.46, which indicates a bit of long unwinding. If we see the option chain, 52,500 strike has significant call open interest, followed by 53,000 strike, and on the put side 52,000 has significant open interest, followed by 51,500 strike. For the weekly series, that is we have the PCR which is at 0.71, and the max pain is at 52,300 strike, that is for today's expiry, while for the July monthly series we have the PCR which is at 1.23. Coming to the key market indicators, so in trade on Monday's trading session, the volatility index has ended at 13.64 level, and if you see, that is in trade yesterday at 64 and losing 1.37. Going ahead, any sustainable move below the levels of 13.4 will lead to resume its southward journey, while on the upside, any sustainable move above the levels of 14.65 will lead to an extension of the pullback rally up to the levels of 15. If we see the advanced decline ratio, it remained flat in trade. Key sectors in focus, so Nifty IT is likely to continue its outperformance in the next couple of trading sessions. The mid-cap IT stocks are also witnessing strong bullish momentum along with robust volumes. If we see the FII DI data, FII sold to the tune of 2000 crores, while DIs purchased to the tune of 648 crores. If we see the FI long short ratio for index futures, currently it is at 82.1 on a net basis, this as they sold about 3,120 contracts index futures yesterday. On the stock futures front, FIs have sold to the tune of 65,855 contracts, while on the options front, FIs sold 58,057 call contracts and simultaneously sold 59,246 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.